Welcome, Luke. Thanks for joining us. For those of you who don't know, he is a member of the community that we got going on here, but Luke is a precious metals dealer out in Alberta, Canada. He is one of us. Big lover of precious metals, as I'm sure you guys can put two and two together. Luke, thanks again for being here with us. I would like to start off and I guess ask you here, what is the current sentiment for you, for your current clients, possibly new clients, when it comes to precious metals, silver, gold, really everything over the sun here?
Josh, thanks for having me. One of the things that I'll preface is like, yes, we're a bullion dealer. That's something that we do a lot of right now because it makes sense. But what our company actually started with, well before I was there, we're a private company. I won't say the name on the air. It's something that we do. We only deal with clients and their referrals. If somebody wants to reach out, via social media or something, and they're from the group and they're like, hey, I'd really like more info, I'd love to help them. So we do wealth cycle investing. So we're always looking for what's the most undervalued asset, what's the best place to park our capital so that it can work, the best for us. But we always focus on physical, tangible assets that we can hold in touch, right? So whether that's real estate, land, food, silver, gold, that kind of stuff. And as you're well aware, I think one of your videos started to kind of touch on this a little bit today that I shared actually, where it was talking about, currency and the devaluation of money. But there's a good ratio between gold and other assets, right? So gold and the Dow, gold and real estate. And when those ratios get out of whack, we know where it makes sense. It's not a dollar value, it's a ratio value. Ounces of gold to buy this, ounces of gold to buy that. And when the ratio favors one or the other, we know, hey, let's move capital from gold back into real estate. Doesn't matter if real estate's $10 million for a single family home. If we can buy, 10 of them for a price of gold that we used to be able to buy only one home for, well, then it makes sense. We're going to switch back. And there's also a ratio between silver and gold that obviously right now is heavily favoring silver still. It was much better in the summertime when it was 101 to 1 or like April. Now it's about 57 to 1. I didn't look today, but I say all of that to then answer your question to say right now we're busier than ever. I've probably done a tenth, maybe an eighth after today of all of last year's sales. I've done it in the first 2 weeks this year.
That
That's how
is
much volume we've
incredible.
moved. Yeah, yeah. And so my clients are educated, right? They've been with us for quite a while. Like my clients have been with me for 3 years. Our office has been around 18 years. So all of this increase, all of the dips that we're seeing, it's just excitement for our clients because they're prepared. I was having a meeting, like having a meeting with myself over the holidays where I was doing some analyzing of my clients who I was spending time with the last year. And something that I noticed was like a threshold of purchasing or accounts like that were transferring, right? Because we can move an RSP into silver and gold, a RESP, like any registered account, Lira, pension, all those things. Not an existing pension that they're in, but like when you leave a place, your
Yeah.
pension turns to a Lira. So those clients that we have, it's like the ones that are under about 20 grand for a, value of an account or a purchase, they're a lot of fun to work with, even though they're more work because they don't know as much, right? They're still willing to put in the effort to like learn. So if I send them a bunch of content to say, hey, consume this so that we can have a deeper conversation around what's going on, they'll get through it. Then from about 20,000 to 40,000, it's like they refuse to do the work often. It's really weird. It's like they know enough to be dangerous, but not enough to make really sound decisions. Then anybody over 40 grand for a purchase or whatever, they trust their own ability more than they even trust me. So once they've like had a conversation with me, they're like, yeah, let's do it. Like I did 100 grand order today over a text message and a 5 minute phone call with a guy, and he's never ordered from me before, but he knows me from another, client and friend, and was just like, hey, gave him some totals, boom, done,
Okay.
orders locked in, wire will
And
happen. So
kind of piggybacking off of that, you're mentioning a new client. Would you say the uptick in volume this year is from a recurring base, or would you say there's a lot of new faces that you've seen over the last few weeks?
it's honestly, it's all new. It's a lot of new
Really?
clients, a lot of recurring clients, like especially for like physical orders.
Yeah.
But a lot of the volume that I've done in the last 2 weeks for registered accounts is new people, right? And that's what makes up the bulk. I mean, most Canadians have been brainwashed over years for parking their money in accounts like RSPs, TFSA, RESPs, those kind of accounts. So there's a lot of funds there, but they're not performing well. So when they find out about what we can do and how we can transfer it into physical assets like silver, gold, real estate, then they want to have conversation. And so a lot of these people have been conversations over the last like month, but it's just, we've just processed their account transfers and orders in the first couple weeks here. And
Makes
yeah.
sense. So I've spoken to people in Europe, in the APAC regions, in Australia, also in the US when it comes to the current silver price, and then obviously bullion dealers selling it. We're seeing a very large premiums pretty much across the world. I don't know what that's looking like right now in Canada. Are we seeing more of a greater divergence
Oh,
between
yeah.
spot versus like what you're actually selling the metals for to customers? Or
So every
what's that
dealer
kind of
is
like?
different, and so many people focus on the purchase price, not the buyback price, right? There's two prices when it comes to metal. There's spot price, which is like I like to refer to that as because it's the futures contract. It's the raw material price in the ground. Then to get it out of the ground, melt it, mint it, stamp it, ship it to the end purchaser, whether that's an investor like us or whether that's a company like
Industrial.
Tesla that's going to just use it. There's a cost for that, and it's usually about $6 to $8 above spot for silver, about 160 to 180 for gold. Just like Boxing Day, premium shot up in Canada. They went to $10. And then it's 11 and like it's bordering on like $12 sometimes
Yeah,
some
I heard
places.
people out in Europe spending $15 over
Yeah.
spot for coins and not even like crazy coins that are collectibles, like really like very standard. I
Yeah,
was
just
quite surprised just about a week ago.
so when it comes to your purchase price, though, something that is really important is not just the purchase price. It's like, what's the company's buyback price, right? And so we've always had the largest buyback. We've always bought back at spot from our clients, stuff that we've sold. So that adds a little bit of incentive and premium to work with us because most dealers are 1 to 4% below spot. I've even seen some at last week at 6% below spot. So I mean, that's the spot price that was listed on the sale because I had a friend come to me. I didn't want to buy everything that he had because some of it I don't want because I don't want to buy federally minted metal. I only buy privately minted and not like rough bullion. Like it's still stamped and minted Silvertown, Sunshine, JBR, those kind of mints. I'm fine with that. So he had a bunch of that. So I bought that. But he had a bunch of RCM and just like bank minted coin and bars. And so I said, well, I don't want to buy that because I won't sell that to my clients and I don't really feel like holding on to it either. And so I paid him, I think it was $98, right? It was just before it went up. And then the following week, it was like spot was 112, but the local place paid him only 105 and 106 for it. So it was like significantly less. So even though he made more, that's just because the spot went up. It wasn't like
Yeah.
I paid him more for his silver on the day that I bought it. And so a lot of times we'll get like a message, like, hey, well, I can get this for this price. And I'm like, okay, yeah, like, hey, well, you can price match. But if I'm price matching on the sale, I'm price matching when we buy it back too. So if you look today, like Vancouver Bullion is one of the worst. They're so low. And when we were like $7 above spot, they were 6 above spot. So it looked good, but their spread was $9 and $10 and some stuff, right? So you're getting a little saving, but then to sell it back to them, they're getting a huge discount. Now, I also know you could buy it here and sell it over here and try to like play that, which is fine. But again, like if you want to play that game, cool. I don't. I just want to deal with whatever's the simplest and quickest, and we can just liquidate it back to,
Yeah.
the mints and things. And
There's value about the building relationships with
uh
trusted parties, especially in this field. There's been a lot of predatory like tactics from bullion dealers all around the world. In the U.S.,
yeah,
Andy Scheckman talks about this quite a lot, where you have people charging crazy spreads, really taking advantage of pensioners who don't really have great
yeah.
understanding. So it's really important to build a relationship with a trusted dealer. I would say.
Absolutely. The other thing that's different from us and like your standard bullion dealer is that the bullion dealer that just does bullion, they're going to always be trying to sell you bullion, and yes, they have education and stuff on their websites and things like that, but they're not looking at anything else that they can do with the capital, right? Where we're constantly looking like, well, is this still the best place to be parked in? And, for the foreseeable future, I see silver as being the greatest place to park your money. Now, I've never been a digital guy, so I'm not a Bitcoin, or XRP guy, mostly because I just missed out on it and now I'm mad. No, I just never really got into it. I mean, it was never my thing. I understand the ease of sending money. I do some US work for a different company and I've been paid in Bitcoin, so I just let it sit in my wallet and like I don't really worry much about it. But as far as like buying it and trading it and pricing it, I tried. It just hurt my brain. I'm like, just buy silver. I got it sitting on the
Makes
desk.
sense.
There's like, you know,
Yeah,
six
yeah.
ounces everywhere.
That actually kind of answers the next question I was going to ask you, which is right now I'm holding a $100 Canadian bill, which for
Yeah.
some is the best form of currency here in Canada. Now, for you and I think we have a very different perspective. And from what you're saying, fair to say, I think that your favorite currency at this point in time would be silver or
Yeah.
anything of its derivatives where you can actually, whether it's melted
Mhm.
down or get some form of bullion out of it. My question to you, that's the case, is what do you say to an investor, whether it's a speculator, someone who just wants to save in that, who basically, instead of taking the route of buying physical, maybe they want to avoid premiums, maybe they want to not have to worry about storage or theft, and they decide, you know what, I'm just going to buy a silver ETF. What is your perspective on that holistically? Do you feel like it's ever a good idea for somebody, or how do you kind of conceptualize that?
So I have some friends that have made a lot of money on silver ETFs because silver has gone up, just like our clients have made money holding the physical bullion part. The difference that I see with ETFs and anything that you're trading online, if you're a diligent investor, you're probably going to have a stop loss in place. Right. And when you're trading, especially if you're doing it in margin. Now, if you're just trading an ETF and you're just buying it and you're holding it long term, a little different. But a lot of the problems that we're seeing right now with these major price fluctuations is from all the volume traded in margin accounts, right? And I like to believe that there's some sinister stuff out there with the big banks and stuff where they're like, hey, you know what? We got a lot of buy options in here. So if we can trigger this down and knock these buy options out to knock the liquidity out of the market, then they're ahead, right? And that's why I think you're starting to see even more price fluctuations. So when silver drops $10 in a day, if you had a 8% stop loss, right, you're kicked out of your trade. And then the next day it's shot up way more. And now you're buying it again at a slightly different, there's still premiums on trading online, right? If the spot price is X and your buy is, you're still buying below, so it still has to come up. It's not noticed the same way as like, hey, this is $8 above spot. You still do it the other way, right? Or if you're gonna buy a put option, you're still paying a higher premium for it, waiting for it to come down so that you're not, it has to do a little bit of work and movement.
Yeah, but then there's also a degree of erosions. You're paying management of the fund, you're paying for the storage, you're paying for the insurance. So for sure, I think it's anywhere between like I think probably about 100 to 200 basis points a year. Could be wrong, guys. Do your own research. I'll
Yeah.
probably look into it and get back to everyone. But
The other
yeah,
thing
no,
is
there is.
to me, there's no value in that outside of price. That's it, right? All you're doing is trading the price point, right? So it's worth 100 today, and I hope it's going to go to 150 someday, and I can make 50% return. Then my next question always comes to, and this is where it usually gets me, where it's like the people that are more in alignment, I guess, with awareness, studied history. I'm like, what if the dollar collapses completely? What if they restructure it? What if they freeze digital accounts? What if they, all these what ifs? I don't live in this world, but that's just something that I've processed where I know that regardless of what the Canadian or American dollar does, real silver still has everyday use value, period. So I know that I can always sell it to somebody that needs it. I can exchange it for any currency in the world with no fees. So that's another reason why I like it. I can travel over a border with it. You just have to declare it. But again, it's not a big deal. Like if I'm going to the US and I want to take, 50 ounces of silver with me for my weekend vacation and exchange it for US currency when I go, it's pretty easy. You just go to a local shop, set it up, take it in, get currency. I don't have to pay the high bank fees, you know. I can exchange it for groceries. I use this all the time, right? And so I have a client of mine, he has an online grocery store, and we order on like Sunday, Monday night. We pick it up on Wednesday, and I have a 10-ounce bar of silver. Beginning of summer, I used to get about a week and a half's worth of groceries for that 10-ounce bar, right? Because we spend about 250 bucks a week on groceries. And so, back when the bar was around 400 bucks, it's like roughly a week and a half's worth of groceries.
Now we're pushing a
And
month.
so, hey,
now, now we're pushing a month. We're
yeah, I get
getting
almost 5 weeks for that bar, right? So,
that's crazy.
um, and like, so yeah, I exchange it, I get silver.
Mhm.
Um, I tried to do that for two reasons. One, I wanted to put more silver in more people's hands, right? So this is a friend of mine runs this thing. I'm like, dude, I can pay you with, you know, Visa or math, that kind of stuff, like everybody else, or cash, but then you got to turn around and buy it. Why don't I just sell you silver at market price and call it a day? And so, That's cool. I pay trades with silver that work around my property, my acreage.
Okay.
So I do use it where I can't trade at ETF. So to answer your question, as far as like parking, do I want to sit in cash? No, absolutely not. Cash is garbage. And I know the old saying like cash is king, and that's because people thought it gave you like freedom and flexibility. I mean, if you've listened to anything Edward Snowden said years ago, he's like cash is tracked. That's why it takes so long to come out of the bank machine. They're not counting your money, they're scanning the serial codes to track who's got what cash. And it's like, so then, the bank machine spits out $10,000 of cash to Luke, and then later Josh deposits it and it's scanned, and it's like, oh, well, it looks like Luke got this cash today and Josh deposited it today. So even though Josh said that it came from selling a couch, it actually came from Luke. So what does Luke do? And now are they using that information? He even said no, not yet, but they still have it. And I was like, damn, okay,
Yeah, and they're building up the capabilities to use it
yeah,
with more ease, let's say for sure.
yeah.
Okay.
The biggest
Um,
reason I don't sit in cash though is because it's being devalued every day, right? Like, so realistically, we still spend around $250 a week on groceries and we get relatively the same amount of groceries. So the cost of groceries haven't rose like of course they have over a year. Things have gone up a little bit here or there, right? Whether now we're spending, 260 and maybe we're not getting a couple things here or there, right? Like um I don't know. My wife does the shopping. I don't really notice it. The thing is, though, is that, again, it's like, well, where can those currency dollars be positioned so that I get the best return? And sitting in a bank account is not one of them.
hmm,
Leaving it at the bank is definitely not one of them because now if I want it back, I got to answer all these questions. What are you taking this out for? What are you doing? Shut up. It's my money. I don't have any explanations when I exchange something for silver, right? And so I'm doing it in little amounts, like I said, little, but whatever we have a budget that we need every month to pay our living expenses and basic necessities and a little bit of spending cash. Anything over and above that, every single month, I buy silver. If my commissions exceed it by 1,000, I buy 1,000. If they're 15,000, I buy 15,000. Like it just
I
really
see.
depends. But I do not save in cash. No.
Okay. And what arithmetic right now? I think we've talked about mine. What arithmetic do you use right now to value silver? You mentioned the gold to silver ratio earlier. You mentioned a few other things. Like, how do you price it in your mind to know whether or not you still want to be buying silver, possibly selling, possibly trading it for something else?
So I still use gold to weigh it against other assets because it's still more stable. So once the gold ratio is out of whack, then I'll look at doing something different. And as far as the silver ratio to gold is out of whack, then I'll buy silver, right?
Okay.
Because so right now at 57 to 1, whatever that's what it was yesterday. I don't know exactly what it is today. Silver's a better buy in my opinion than gold. So I'm going to park my money in silver or my currency in silver instead of gold. Now, when the gold to house ratio changes and it's looking like, hey, we can get some pretty good bang for our buck buying real estate again, then I'll sell the silver and move to real estate. And
Okay.
so throughout history, right? Like, and I've been wanting to do this for a while, like a chart. It's funny when you're like, do you have a chart? I was like, I wish I would have made this before, but Mike Maloney made one years ago where he did the cycle between real estate and gold, right? If you started in 1900 with a $3,000 home, today that home's worth like 330 grand, right? And it's a 100-year-old home. If you had 3,000 in gold back then, it's worth like, 350 grand worth of gold today. Maybe a little bit more today, but this was, 10 years ago when he made that video, right? Or however long ago it was. Um, but if you sell every time the ratio between gold and real estate favors one or the other, you end up with, after 100 years, you end up with a portfolio of around $45 million versus just one home, right? And so now I understand what people are saying, oh, I can't eat gold. I can't live in gold. And I go, I understand that, but like we're talking about investment and like this isn't buying and selling a whole bunch of things. This was starting with $3,000 and over 100 years, that 3,000, if it was just sitting in the S&P is only worth X amount. If it's just sitting in gold, it's only worth X amount. If it's sitting in real estate, it's only worth X amount. But if you go between those assets at the highs and lows, when the ratio is out, it's not necessarily just the peak price point, you're going to have exponentially better returns than trying to time things. So, 1928, 10 kilograms of gold bought you a house. 2024, 10 kilograms of gold bought you the average Canadian home, right? It was 70,000 bucks a kilogram in 24, and the average three-bedroom home in Canada was 700,000 bucks. So that's 10 kilograms of gold buys you. In 2025, you could buy two homes. I bet you this year it's probably closer to three. So now we're starting to see this ratio starting to change where I'm like, wait a minute, like, how many more homes can I buy? But if you're sitting in cash, you can still only buy one house.
And what would you say about there's a concept in real estate called additional leakage over time, right? Because basically what we're seeing, especially we have a lot of rent control here in Canada, we have properties that are appreciating at a certain rate, typically actually closer to the rate of real inflation, right? Yeah, that 7 to 10%, especially in the last 15 to 20 years. You have virtually every cost associated to home ownership increasing at that same rate, right? Insurance, taxes, the plumber that you're going to need, the bricks, right? And then you have rent control that's making it so your tenants are only going to be paying you, I don't know, 2% more per year, 3% more per year. It's like if I told you, let's start a business and all your costs are going to go up by 8 or 9 or 10%, but I'm going to force you to only raise your prices by 2% every year, right? Probably a bad business because over time, what you're doing is you're creating a divergence between what you can produce and what it costs you to maintain. So, do you feel like the historical analogs around gold and real estate are still, I guess, accurate or proper? Or do you think that something like that needs to be revised to reflect the additional leakage or hardships there is to holding on to real assets today?
Um, I think holding on to them still gives me way more security and peace of mind than not having them, right? So, I mean, having the metal right now, regardless of what the ratio is, like here's the thing, if the ratio greatly favored buying real estate in Canada right now versus silver and gold, after everything that I've said why we would do it, I wouldn't do it because I don't want to be holding extra real estate with the rules that are going on in Canada right now. Maybe in
Yeah.
the United States, not so bad. It would depend on the state as well, right? I'm not going to buy residential real estate in California where the taxes are crazy, that kind of stuff. So we look at a lot of those factors, but given the landscape of the world for the last 6 years, I want to be in assets that I think can give me the greatest chance of financial success, but also the greatest security, right? I mean, at the end of the day, we don't own our home. The bank does. Most people, the bank owns your house. And if the bank doesn't own your house
The
and you're
government
mortgage
does.
free, yeah, well, the government, yeah.
The
But
insurance company does.
but even if like you have no mortgage, you're paying property tax, whatever, that's fine. And people are like, well, I don't have a mortgage, I got peace of mind. I'm like, well, then I challenge you the other way. I'm like, now you have $500,000 earning you zero equity. What are you doing? That's like a terrible financial decision.
And costing you maintenance 1% per
Yeah.
year. You're
Yeah,
paying
or
property
or
taxes.
more,
You're
right?
ten
Yeah, all,
thousand
all those
dollars.
expenses. And so I even go through this with my wife because we have an acreage with a shop, 5 acres, right? It's worth probably over $1 million, 500,000 in equity, give or take, right? And I'm like, that equity's earning me zero,
Yeah,
right? And I'm like, and it bothers me because I said to her, I was like, if we sold and we took that equity and bought silver 3 years ago, we could buy two of these properties right now. And
all cash.
and then actually be mortgage free and still have something left over. And those are the things where it's like, are you willing to put in some short-term pain for long-term gain? Like we're going through like life-changing generational wealth creation stuff right now, and people are going to look back in 10 years and go, God, that was the greatest time in history. Why did I not listen to somebody like Luke or Josh? Right? Why did I not do something slightly different? Why was I just listening to my, financial planner that has like no experience and the only reason he's making money is because he's holding all of yours? Most of these guys haven't done a lot of research. They just do what they say that they're told to do, and they're just smooth talkers. They don't, whether they invest in the same things that they're selling is up for debate. Um,
Hmm.
they make money year after year off of your money, and that bothers me,
Yeah, and
and
it's a heads you win. So heads you both win, tails you lose alone. Because no matter what, they're getting their spread. right?
Yeah.
It's a really twisted game, right? If I told you, give me your money, I'm gonna invest it, and if you lose it, that's just on you, and I'll still
Yeah.
take my cut.
And
And
I'll
if
still,
I make
that's the
something,
worst
I'll
part.
take my cut. It's a very frustrating process when you think about it, when you just put it like straight like that. But yeah.
I had this, like, I've had a bunch of these. This isn't unique, right? Like, where I'll have a conversation, people go, "Wow, I really like everything that you said." And then they want to move ahead, they want to transfer an RSP or whatever. And then they talk to somebody, family member or their advisor or whatever, and they advise against it. And then they don't do it, or they do a portion of it or whatever. And I'm like, yeah, sure, no problem. We'll do a portion. And then now you look and it's like, even just taking last year out of the equation, right? Because last year was extraordinary for silver, right? 100 and what did we end with? 156%, I think. You're
Pushing near 160. Yeah, yeah, yeah.
I usually write 140 because then people are like, "You're wrong. It's 150." I'm like, "Oh, geez, great. Sorry, I was wrong." Like I always
Be
under
wrong on the
classify the
downside.
numbers.
Yeah, no, I get that.
Um,
I get that.
we had a client that they, like, again, like, had a portfolio. It was worth X amount of dollars, that they had deposited into it 10 years ago. Now they're transferring less, right? Because it's gone down. They've taken some money out. They're going to do the whole kit and caboodle, 400 grand, and then we have some fees, right? So we have a transfer in fee that the trust company charges. Then there's storage fees for the metal to be stored at the vault. Um, and they're low, like it's a one-time transfer in fee of 1% if it's under 100, over 100 grand. 1.5 if it's under, so it's peanuts. Then the storage is 1% annual. That's the only annual fee you have is storage and insurance. That's it. There's
Yeah.
nothing else. So all the gains are yours. We have an admin fee in the office of 950 plus tax, so just under $1,000, right? And I've had people tell me, well, I was talking to my advisor, and the advisor said, "Whoa, that's crazy. They don't charge that much they don't even charge an admin fee." I'm like, "Yeah, they do. And they charge it every single freaking year. So don't tell me that they don't charge it. And we don't get any of that. That's just to cover all the costs for our bookkeepers and administrative people to set up the accounts and not maintain them, but just to like do it because it's a self-directed account. You're responsible. I want to empower people. That's why we don't take cuts year after year. And like, so for instance, this one, I said, well, okay, but that account, if we would have had it 10 years ago, would be worth $1.2 million. And that was back in August, right? And I said, so now we're going to take a fraction of that account and move it. And like I know where they've been at now, this account's growing exponentially. It, this account for the fraction that we moved made more money for them in 6 months than the larger portfolio made in 10 years. And then the advisor is still going to sit there and say, like, I'm looking out for your best interest. It's like, no, you're not. You're looking out for yourself,
Yeah.
right?
Fair enough. We can't forget, like, people don't realize how sinister what happened during COVID was when it comes to the 60/40 portfolio, right? Because we think about the average fees that financial advisors are charging, typically between like 0.8 to 1%. Let's call it approximately that range. And the interest rates were so low right at that point that some of the bonds that they were buying in people's portfolios were basically yielding that same 1%. So, really, what they were doing is they were locking in your money, and the entire spread you were making was their fee on that capital. And
Yeah.
people just went along with it as if it's a normal thing to happen, where your entire interest on your bond goes to your advisor. And that's 40% of your portfolio because the
Yeah.
60/40 is tried and true. Right? And it's something that just went under the radar and we never talked about it again. And at least now there's a bit of margin, right? You get a long-term treasury, you're making 4 or 5%, you're still losing money, but at least nominally it's up. There's a positive nominal spread. But back then it was I would call it very, very sinister. All right, Luke, I have one last question for you. I like to ask all of my guests this, which is if today you had to invest in five resources, metals, commodities, and hold them for the next 10 years, not trade them, not sell them, what would those be?
How much money do I have?
As much as you want.
Well, I mean, that's uh like you want me to list five things?
Yep.
The hard part right now is it like I know that the ratio is changing. So it's
Yep.
like, it's not going to be forever. Again, the total money would also change what I would do because like if I only had say 10 grand, right? And are you basing this off of me or just what I would give advice to somebody with 10 grand? Because they're very different answers.
You.
Because here's the other thing, because as much as I love selling silver because I get paid, if you're not making enough money every month, you should invest in your own knowledge so that you can earn more money, whether that's at a job or if you're in business for yourself, you should be figuring out ways that you can increase the amount that you charge. And so, unfortunately, so many people talk about investing and think about getting ahead, and they spend money on investing, right? And they want to squeeze that. Like they're like, here's my $1,000 and I need this to 10x. And I'm like, you're dumb. Like that's like it's, but if you took that $1,000 and bought a course that could teach you how to make 10 grand and you could do that on repeat, you've made infinite supply on your money. So, when it comes to what assets I would buy based off of what I know and how I can sell, I would probably park all of it in silver right now. And I would just gamble for the next 10 years. And I say gamble because I know that it's going to change and I probably would want to be in real estate. So if I had a few hundred grand, I would buy probably half of it I would buy with silver. And then I would take a portion of that and I would buy some real estate. Probably in one of the areas that's already started to see some price reductions. I would just figure out where we've seen some um scaling back on home costs somewhere in the United States. We haven't really seen that in Canada yet. Like Toronto, Vancouver, they're starting to be like signs that you should buy there, but it needs to crash. So yeah, that's probably what I would do. And then I would take the remaining 50 grand and I would invest in food. And I would look at how I can, food costs are going to skyrocket in the coming years. I firmly believe that. They already have been. And so, and then the other thing is like availability. So I'd probably look at, how I could either get some, grow towers or something like that, where I could be producing and growing some food in my garage or home, as well as getting myself a couple chickens, because they produce eggs and they eat all your scraps. And so it's a pretty good thing. We've got, I don't know, 40 chickens and 12 ducks, so we get some decent eggs, not in the winter, but
Okay.
that's
Nice.
that's what I would do. I look back and I see in the, what performed well in other periods, right? And we're like going in, the roaring 20s in the United States and, even in Canada, like we've gone through that and we're kind of encroaching on like the Great Depression type scenarios of overprinting and whatever else. And I don't think we're far away from that. All of that to say, I'm not scared about what's happening. There's massive opportunity, right? Other than COVID, the last time that there was more, there was billionaires made during COVID. There was more millionaires made in the Great Depression than any other time in human history. And there's more billionaires made during COVID when everything went crazy, right? And so there's opportunity in crisis. You just have to be, aware of it and take advantage. Man, that's such a bad way, but like position yourself properly because I don't want to take advantage of somebody that's losing, right? Like, I really don't. I had a client this summer wanting to sell off their silver portfolio because they had been, advised to do something different. And I just said, like, well, what did that fund that you're going to move into, what did it do the last year? Well, your funds have been with us. And she's like, well, 10%. And I'm like, well, yours have done 25 to 30%. So why would you take something that's already performing better and move? And like we had a pretty good discussion and she kept it and she made another 500 grand the last 6 months.
That's incredible. Wow.
So like, you
That
know,
was a valuable chat you had with her.
yeah. I texted her the other day. I was like, hey, just checking in. How's things? She's like, I'm ever glad I listened to you. I'm like, yeah,
Yeah,
me
I
too.
think you owe me a drink.
And what did it, and this is the funny thing, right? Because people go, oh, yeah, well, Luke just wanted you to do that so that he didn't have to buy the silver back or CMC this. It's got nothing to do with anything. I told her, I said straight up, I said, um, if you really wanted to know what I would want you to do, if I was being honest and sinister, I said, sell all your silver and gold and move it into something else. And then in a month or two, when you realize, dang, maybe I made a mistake, I should move it back, I'll
Probably
get
buy
paid
it
to
back.
sell you the silver again. I'll
Yeah,
get paid twice. So
Yeah.
I don't want you to do that though. I want you to just stay and be smart and do your research and watch the stuff that I know now that you're asking me to do this. You haven't watched. You haven't read the updates. You haven't done the stuff that we send out. And so once she did that, then it was a done deal. So
Amazing. All right, so just to recap, we're dealing with pretty much bulk and silver here, looking at land, real estate, and then ultimately some livestock and possibly agriculture being kind of how you would spread that across.
yeah. Yeah, if I had a couple hundred grand, that's what I'd do. 100K in silver.
Yeah.
I'd take about 50 grand and I'd look to try to buy some form of cash flowing real estate. And not a house, right? I would look at least how I could get involved with, at least a fourplex if it was going to be myself. But I'd probably say, like, can I take this 50 G's and give it to somebody to invest in the property,
Yeah.
alongside? And then I'd take the other 50 and plan for how I could, get some food and maybe some other education for myself, right? Like what could I do to increase my, ability to earn, right?
Yeah. 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 All right, man. Well, thank you so much, Luke, for joining the call. It's been an absolute pleasure. Love diving into these things with you, and it really helps to get a kind of boots on the ground perspective of the bullion market right now in Canada. Any last words, any final thoughts that you'd like to share before we hop off here?
Yeah, I think, I'm good. Thanks for having me on. It was nice to have you. You came on. I gotta come back on my show too. You guys can find me on social media at the Duke underscore Spicer, or we do have a podcast channel at the Spicer Life, is the name of the podcast. And so we've got some good, cool guests on there that come on from a wide range of, industries. So yeah, thanks. That's it. And thanks for having me on, Josh.
All right, guys, you guys should definitely check that out. I will make sure to attach the links for Luke's podcast and his page in the description. And yeah, have a nice day, guys. Bye 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 bye.
Thank you.